The Aussie versus US dollar is making a break to the upside. That is dollar selling. This is congruent with some of the other currency pairs in trading here today. And it sets up next week to be a little bit more positive from a technical perspective. I'll tell you why in this video, so let's get started. Looking at the hourly chart of the Aussie versus US dollar, you can go back to this high right here. This is back on November 25th. And the price of the Aussie versus US dollar has been trending to the downside. We reached a low price in the month of January down here at 0.61309. And since then, we've seen a fairly steady rise to the upside. That rise to the upside moved above the 38.2% retracement in trading this week here and here. That 38.2 came in at 0.62902. And you can see that the first move above failed, came back down. First, second move above failed and came back down. Why? Well, there's more in play than the 38.2% retracement. More specifically, this area, this yellow area between 0.6287 and 0.6301 was home to a number of different swing lows and then swing highs through here that formed this ceiling level, including the high prices that we saw in trading this week. And so the market came down and moved back up. It came back down. But in today's trading, we saw the price not only move above the 38.2% retracement, but also get above the high of this swing area, changing the bias more to the upside, giving the buyers more control. They accomplished two things, getting above those two key levels. And even more important, I think, is that the price low that we saw on the corrective move in the early North American session came right down to the high of that swing area, found willing buyers against that level. And that gives me a little bit more confidence that maybe the buyers are certainly meaning more business, and it should you too. At least what we know is that as we go into next week's trading, if the price can stay above this level, stay above the 38.2, stay above the low of the swing area, so stay above this area right through here, from here to here, then the buyers are in play. The buyers can push higher. The buyers can probe further to the upside, and the sellers feel a little bit more nervous because they're making that break. Now, on the top side, the next key target level would come in just above the high from today, but also near the 50% retracement of that same move to the downside. That level comes in at 0.6339. Get above that level, and I'm going to start to look toward the daily chart for clues. Remember, the 0.6339 level is that 50% retracement. And if we look at the daily chart, we can outline that level in between this yellow area right here. Now, this yellow area was defining a floor through here off the daily chart going all the way back to 2023. So all through 2024, we came down, tested that level, came down, tested that level, came down, tested that level in the month of December before breaking to the downside. So if we're able to get above that 0.6339 level and then get above the 0.63633 level, now we're back above that floor area. And by the way, that floor area goes up back to these levels as well. So be aware of that, and even way back here. So it's there is either support or resistance for this pair in that area. So get above that would be more bullish, and then we'd start to look toward the 38.2% retracement of the move down from the 2024 high to the 2025 low, and that 38.2 comes in at 0.643351. That would be the next key target longer term for this pair on the top side. But all in the short term and going into next week, all is going to hinge on this area right here on the hourly chart. Stay above the 0.62874, and the bias remains more to the upside. That's my look at the Aussie versus US dollar going into the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.